you've got kind of this crazy idea that like, in order to get inflation down, you have to hike the interest rate higher than the inflation number. And in the United States of America, like I dare them to go and try to create a 9% inflation or interest rate. 9% inflation interest rate will bankrupt the United States of America. Another view of the world is that at the same time that Bitcoin's price has gone down 70%, 65% of Bitcoin has not moved, which is an all-time high percentage in the last 12 months. And so it's almost like there doesn't appear to be that much more Bitcoin that people are willing to sell. I asked them, I said, what do you guys think about it now? And the answer I got was absolutely fascinating.
All right. Welcome back, everybody, to Altcoin Daily. My name's Austin, here with Aaron, joined by host of the Pomp podcast, where they go over everything crypto, finance, life. Anthony Pompliano, thanks for joining us.
Absolutely excited to be back. Thank you, brothers.
Absolutely. And dude, your podcast has been killing it lately. What are some of like some of your favorite guests that you've had that our audience can check out right now?
I like them all. The podcast guest selection is basically based on a rubric of who do I want to talk to and do I think I'll learn something from them? And so it's funny to see how the audience reacts, because sometimes the audience agrees and things are really, really popular. And other times the audience is like, well, who the hell is this person? Why are we listening to them? But I'm always picking who I want to listen to. And I would say the one that probably surprised people the most was I brought on Texas Slim, and he talked about kind of the food supply system and a lot of the issues and challenges there. And that seemed to get a lot of attention. So I don't know, maybe that one.
I'm going to link your channel down below as well as your Twitter. Encourage the audience to check it out. Today, I want to go all over, cover everything crypto and finance. So I just want to start with your take on the macro climate in Q4.
We're fucked. No, I'm just kidding. No, look, we did exactly what we wanted to do from March of 2020 until November, December of 2021. We knew that there was the liquidity crisis in Q2 of 2020, and we needed to solve that problem. And there was a lot of people with a lot of pain, right? People forget there was 6.6 million people a week that were filing first-time unemployment claims back in March and April of 2020. So like shit was bad, right? The government told you to go sit in your house, shut down your business, and you are not allowed to go make a living. Like that is bad stuff. The velocity of money dropped, asset prices dropped, the world was ending. And of course, the central bank stepped in. They had the two emergency rate meetings where they dropped interest rates to 0%. And then they went along with their bedfellows over in the political world, and they created trillions and trillions of dollars worth of liquidity and stuff in the market. Well, the shocking part is not what they did, because they were going to intervene in the market and solve it. The shocking part was that basically the mainstream media and the economists and all the talking heads were like, don't worry, inflation's not going to come. It's like, if you pump trillions of dollars into an economy and you incentivize people to go borrow incredible amounts of money and put that into the economy as well, of course prices are going to go up, right? Like that's like kind of 101 is you're changing the supply demand balance. And so I was pretty adamant and loud about that very early on. I think there was a number of other people, specifically kind of in the Bitcoin and crypto world, that saw this and have a very specific worldview that ended up proving to be right. Being right is not a good situation here, because now we have historic inflation and there's a lot of people, right? Literally 100+ million Americans that are suffering in a very, very bad financial position. And so naturally, as we saw that occur, there was a couple of things that happened. One, there's a massive asset bubble. Two was there was this kind of separation, or the wealth inequality gap was getting wider and wider. And then the third thing was at the same time that we were seeing historic inflation, massive wealth inequality gap widening, and this asset bubble, the Fed was still having 0% interest rates and still conducting asset purchases. So like in January of this year, inflation was over 7% in the United States of America. It's the highest it's been since the 1980s, and we were still buying assets in the market. Talk about like over rotating, right? So, okay, we're in a bad situation. What do? Well, you got to go back. And that's exactly what they've tried to do. They've tried to create tighter financial conditions. And so when you see that, you're like, that makes sense. Like we have to get inflation under control. But what has, I think, been surprising and leads into kind of where we're going is At the same time that the central bank in the United States and central banks around the world are trying to create tighter financial conditions, like politicians are off the chain. These people have lost their minds because what are they doing? They're out here literally sending aid to other countries, right? The whole idea of like, we're sending aid to Ukraine, but we got people in Jackson, Mississippi who don't have clean drinking water. Like the priorities are kind of crazy. Then on top of that, you get into things like in the UK, the proposed tax cuts or the spending bills here in America. And so you have central banks trying to create tighter financial conditions while you have politicians still pursuing these like loose fiscal policies. And those two things are at odds with each other. And so it's kind of this battle of forces. Do the politicians or central bankers win? But in either winner scenario, the American public ends up suffering. And that's what we're watching play out here. And so what we now are starting to see, which is very interesting, is that there are calls from outside organizations to the United States and to the central bank saying, hey, you got to cut out this tighter financial condition situation. You got to not have higher interest rates. You got to stop trying to conduct quantitative tightening. Now, will they listen or will they not? That's kind of like a multi-trillion-dollar question because literally the asset prices and markets hang in the balance in terms of which way they're going to go. But what I do find absolutely fascinating is not the Bitcoin community. It's not the politicians. It's not the central bankers. Like you got other organizations saying, yo, y'all got to cut this out. And so I've maintained this entire year, I do not think it is likely that they will cut rates before the end of the year, but I've always thought that there was a higher probability than people assigned to it that they could cut rates because we're going into midterm elections. You've got kind of this crazy idea that like, in order to get inflation down, you have to hike the interest rate higher than the inflation number. And in the United States of America, like I dare them to go and try to create a 9% inflation or interest rate. 9% inflation interest rate will bankrupt the United States of America. And so you just get in this weird place where you're like, damn, we may just have to live in a stickier high inflation environment for the next couple of years. And so how does that change asset allocation for individuals? How does that change consumer spending? How does that change business planning? How does that change and frankly hurt pension plans, all sorts of endowments, people who have lots of fixed income that are going to be underwater on that for multiple years in a row? Just bad situation. And so I think understanding this stuff is important to start, and then you go from there.
So unless we see that Fed pivot by the end of the year, maybe, is the cryptocurrency market equally as fucked?
I mean, it's fascinating to think. So let's look at Bitcoin, right? In one argument, you have to hold the view that if the Fed continues to raise interest rates and kind of create these tighter financial conditions, all assets will trend towards a one correlation. And so everything's going to continue to sell up. Stocks, they got more to fall. Bitcoin, crypto, all this is going to fall. Real estate's going to fall. Commodities are going to fall. Like the Fed is going to be successful in destroying demand, right? And destroy demand is a code word for we are going to punish you until you stop buying shit, right? But like that's what they're trying to do. And obviously, if they are successful, inflation will come down because they're going to destroy the demand. That is one view of the world. Another view of the world is that at the same time that Bitcoin's price has gone down 70%, 65% of Bitcoin has not moved, which is an all-time high percentage in the last 12 months. And so it's almost like there doesn't appear to be that much more Bitcoin that people are willing to sell, right? Now, again, can that change? Yes. Can there get leverage in some of these like relief rallies? Yes. Can there be a price point where there's more liquidations? Yes. Like there's all these caveats to it. But I do think that like the strong hands seem to have found some equilibrium here, which puts a price point somewhere between that like $18,000 to $22,000 price. The third thing is the regulatory environment. So you can look at continued lack of regulatory clarity gives us more of what we've already had. No new kind of catalyst, no new investors, and we just kind of go sideways for months, if not another year. If all of a sudden we wake up and it's like, bam, here's a regulatory framework. This is what we're going to agree to. Bitcoin ETF is approved. This is done. This is done. Whatever. Like trillions of dollars can come into the market, and like there's your catalyst, and we're off to the races. Now, I'm an optimist by nature. I don't think that's going to happen, before the end of the year. So my kind of like base case is just the macro market is ultimately the decider of our fate across all asset classes, not just crypto. And if I had to bet, which I am not directionally betting on, it's just that like they're going to continue doing what they're doing barring some external event, right? If they weren't going to change their policy when Russia invaded Ukraine, it's hard to see, what else really could have caused them to do that in the next, what are we, less than 90 days before the end of the year.
Ethereum and its ecosystem has changed from where it was a few years ago. I want to get your updated thoughts on Ethereum. Now, I'm wondering, would you describe yourself as an Ethereum bull end of 22 going forward?
So I'm not going to say who it is, but I had dinner with a couple of people. This is it's probably like right around the merge. Maybe it was like 2 days before, 2 days after, I can't remember, but it was like the merge was there. And these are people who, one of them had invested in the ETH ICO. Another was very publicly supportive, all this stuff. And I asked them, I said, what do you guys think about it now? And the answer I got was absolutely fascinating. They believed that it was likely that Ethereum's price could go up in the future, but Ethereum's share of smart contract kind of addressable market would drastically collapse. And they also did not see a world where ETH BTC would ever reach a new all-time high, right? In terms of like Bitcoin would continue to dominate and would never actually kind of be surpassed. And the reason why that was fascinating to me is like, these are investors. They are not by any means technical. They weren't so worried about kind of other data points. It was very much like, how do I look at this from an investment thesis? And that's like a nuance that I don't hear a lot of people talking about, is like the price of the asset could go up, but also the rise of other competitors could be greater at the same time, right? So it's not really a bull or a bear. It's almost more of this like centrist view. Now, I have no opinion. I literally don't know what's going to happen. I could make the argument that the merge was a positive, and now all of the dreams are going to be realized from that community, and they're going to be off to the races, and the price is going to go, to the moon. Well, it kind of looked like it was more of like a buy the rumor, sell the news, as my friend Jason Williams likes to say, right? Like, doesn't really seem like it exploded afterwards. The other argument would be like the Bitcoin maximalist argument, which is ETH successfully transitioned, but they transitioned to an inferior system, which is going to make it more centralized over time, and the incentives are off, and like it's just recreating the fiat system, right? And so I just choose to like not participate. So like when I have new dollars going into the digital like financial system, I always think about where do they go? And the only thing that I'm willing to buy, other than like private companies or companies that we start and operate, is Bitcoin. And so I'll continue to do that, mainly because it's less about like, in bull markets, people think of how high a price can go. I think in bear markets, people think about like, how much money could I lose, right? Like the psychology shifts a little bit. And you want to have the highest degree of certainty. And so if you polled the entire crypto industry and you said, 10 years from now, how confident are you that Bitcoin will still be here? My guess is that a very large percentage of people would say yes. If you ask that same question about Ethereum, I still think there would be a lot of people who would say yes. I just think it'd be a smaller number than the people who would say Bitcoin. Then you kind of just move, like you can just go down coin market cap, right? And it's like USDC. How many people think that'll still be here in 10 years? Like there's probably a lot, but it may just be smaller than the next one, whatever. And so I think that's how people are allocating capital right now, right? Is like, I don't see too many people being like, oh, I'm buying this because I think it's a 20X. I see a lot of people like being like, oh, these are cheap prices, right? Like, kind of like bag holder quotes type stuff going on, which is fine, but that's just the nature of bear markets.
Right. Kind of sounds like you saying, Ethereum could go up, but it's also very possible that the market share could get, go down compared to alternative layer ones. Sounds to me like you're perhaps a crypto Web3. You think it's going to continue, but you're not necessarily willing to say it's going to be Ethereum.
So it's interesting, right? Like I probably don't buy into like the Web3 narrative as it is presented, right? Because I actually think that all of the conversations now, 10 years from now, we'll look back and laugh. Like, who the fuck cares what protocol stuff is built on? right? Because yes, today we care because there's like the tribalism, there's the technical superiority, there's who can get the developers to build. Like there's all the things that we see playing out in the market. But the end user who shows up in a decade is like, yo, when I type into the Google box, do I get the answer or not? Right? They don't know, right? Like, could you guys tell me the protocols that Google's built on? I couldn't tell you, right? All I know is I type into that box and it's like magic and it answers my question and it's awesome. And I feel like we have a cheat code to life compared to all of our ancestors because we got a box and they don't, right? And so when you think of 10 years out, like I think that's the big jump here is we've got to move from like, I don't know, call them like the technical tribal wars into like, show me a product that the mainstream audience uses, right? I know that there are, depending on estimations, 100 to 200 million people who hold Bitcoin. You can debate, are they using it? How are they using it? Whatever, but like they hold Bitcoin. Okay. Show me the other things. And there are some products, right? Like, I don't know, MetaMask maybe. I think they have 10 million users. Don't hold me to that number, but like they have some material number where it's like, okay, that's not zero, right? If you look at some of these platforms, but it ultimately gets at like 10 years from now, what is left? What is still standing? And one of the things that I think is drastically understated or underestimated is right now, a lot of people in crypto, they are going to fucking quit in the next 10 years. They're going to quit because they got rich. They're going to quit because they get burnt out. They're going to quit because they lose enthusiasm. They're going to quit because other things in life take priority, right? If you're a 25, 27-year-old man or woman right now, you're single and like all you do is think about crypto. When you're 35, have 2 kids, you're married and you're like, crypto's cool, but like, you know, I want to do this other thing. Like naturally your energy and focus changes. And so I think that there's a lot of stuff going on right now that it's easy to look as a snapshot in time, but I've been trying to spend a lot more time thinking about like, okay, what's 10 years out from now? Because that's really the way to filter where should you be spending your time, money, and energy today is what's going to be valuable in 10 years, not what's going to be valuable, you know, in January of 2023.
Aaron,
Totally.
You two are looking at me like I'm fucking crazy.
No, we're just seeing who's going to ask the next question.
I loved it. I'll go.
Yeah, okay,
dude, I'll go. I've loved the first, dude. Sometimes when you're working with your brother, dude, you get it. You don't know who's jumping in next.
I know. That's why my brothers and I, we just talk shit to each other.
It's perfect. Hey, my final question is practical advice for investing in a recession. What do you got?
I mean, so obviously not financial advice. I think that there are a couple of ways that you can approach it. And the reason why it's definitely not financial advice is like everyone's situation is different, right? Your risk appetite is different. Your cash flow is different. The assets you hold are different. Your responsibilities are different, like all this stuff. But I do think that there are maybe like an ultra aggressive approach, an ultra conservative approach, and then like a kind of a centrist approach. The ultra aggressive approach is like prices came down. And as long as you're buying assets that you think will be around for a long time, like just deploy as much capital as possible, grab assets at, at a discount. Now, the risk with the ultra aggressive approach is that you catch falling knives. The stock market came down 20%, but really it's going down 40. And so you still got 50% to drop, right? That wouldn't be a good situation because you still lost 50% of your money at some point. So I think ultra aggressive, there's very specific types of people. They've got strong balance sheets. They've got a lot of cash flow. They have long time horizons. They're usually more sophisticated, right? They understand kind of what they're buying. They've done the work. They have high confidence, all that stuff. So that's one approach. The ultra like bear or pessimistic view is like sell everything, get cash, and just like button down the hatch and be prepared for like a 3-year, horrible financial situation. Again, certain type of person, certain type of situation. What I think most people probably do is they're like, all right, we were in good times. We're in like not so great times, could be worse times ahead. And I need to be prepared for that situation. So you know what I'm going to do? I'm going to try to optimize my cash flow to just have as much as possible. I'm going to shore up my balance sheet, make sure that I could survive for, weeks, months, years, whatever the number is that's important to them. And then they say, and if I have some cash left over, I'm going to try to buy some assets. I'm not going to try to time the market and buy the absolute bottom. I'm going to dollar cost average in over, the next 6 months or something. And I'm generally going to just buy assets that I think are like good assets that will be around in a decade. The problem with that plan, or the risk to that plan, is you're looking at it today. You've got good cash flow, you've got a strong balance sheet, whatever. If you lose your job 3 months from now, you may not be in the same situation. So I always tell people that, like, as we are in these not so great times, or headed into potentially worse times, just always err on the side of caution, right? Like, is your life going to be better or worse if you allocate extra money to investing versus extra money to being able to weather the storm? You're probably going to have better peace of mind and be able to just be in a better position if you're more secure than if you are simply over leveraged, acting like a crazy. Because at the end of the day, I mean, do you guys know where the bottom of the market is? I don't. Right? Should go down way more. I don't know.
I'd love to pick your brain a little bit more on crypto. I'm a big fan of your show, and I noticed, certain cryptos sometimes make the cuts that you guys talk about, some don't. Like, you'll talk about Bitcoin and Ethereum, obviously. Solana sometimes will make the cut, but Cardano doesn't necessarily make the cut. Do you think, and this is a serious question, because Solana and Cardano are different, do you think Solana is more interesting to you than a Cardano?
To be honest, I have no opinion on either one. I don't personally hold any of them. The only thing that I know about Solana in any depth is that we were LPs in Multicoin's first fund, and they made a lot of money on Solana, right? Like, and whether people like this or not, I think there's a lot of people who made money on certain assets, and that's why they run out and they're talking about it, right? And so it's like, oh, this is amazing. I love this thing, right? Well, guess what? If you go to the stock market, the people who made a lot of money on Amazon, they let you know, right? And so, like, this is just human nature. This is how markets work. This is how investing's worked for a long time. And so when you see that, it's like, I didn't make that decision, right? Like, we gave money to Kyle and Tushar. We thought they were smart people. We actually had no clue kind of exactly what they were going to go invest in, but they had an interesting thesis. It was different than ours. So part of it was like, hey, maybe we're wrong and they're right, or whatever. So I think that's like really my only interaction, frankly, with those assets. And then on top of that, I believe focus is like really important. And so it used to be that you could look at the entire crypto market and you could pretty much have an opinion on everything. You could know what was going on with Bitcoin, Ethereum, NFTs, other smart contract platforms, like whatever was there. I don't think you can do that anymore. Right. And you see it, like, look at the investment teams at these asset managers. They now have like an NFT team. They have a like payments team. They have a smart contracts team. They have a gaming team. Like, the specialization comes as the market matures and you get kind of more depth in each vertical. And so, I read the news, right? Like, just like everybody else, I'm on Twitter. I generally have a sense for like what people are talking about, but I don't really spend that much time trying to understand the nuances. Because it's just not my thing. Just the same thing of like, I don't own public stocks for the most part. It's just not my thing, right? I don't have an advantage there. So like, I'll go spend my time on my thing and let somebody else cover that stuff.
Thank you so much for taking the time with us. I want to have you back sometime Q1, Q2 in 2023. But final thoughts for the Altcoin Daily Army.
I love what you guys are doing. I appreciate you guys having me on. I think most people right now would benefit from doing three things. One, learn as much as you possibly can. There's a lot of boredom out there, and you can spend it yelling and screaming at people on Twitter and just acting like a crazy. I love to doom scroll as much as everybody else, but like, try to go learn, right? What podcasts, books, tutorials, just go learn, I think is a huge advantage. Two is, I think it's every single person's responsibility in this industry to do your part. What your part is unique to you. So if you're a technical person, help build something, right? Whether it's a weekend project, whether you go when you work full time, whatever, go do that. If you're really good at articulating ideas and can communicate well, go do that. If you're really good at data analysis, go try to help there. If research, whatever it is, like, go do your part, because it's going to take a lot of people to make this happen. And then the third thing is just keep in the back of your head, like, this too shall pass. this is not my first bear market going through. And I think part of what has shocked me a little bit, maybe shocked is too aggressive of a word, but just like surprised me in some way. It's like, there's people who I'm like, dude, you were here before. Like, why are you freaking out? Right. And maybe it's because they've made decisions I don't understand, or they're over leveraged or whatever, but it's just like, it'll be okay. Everyone take a deep breath. Life goes on. And just remember, this will pass. And I think that it'll kind of calm everyone's mind, and optimizing for peace of mind is really important in these moments, because if you don't, you may panic and make dumb decisions that you regret, later on.
Sound advice. Links for your stuff down below. Thanks, man.